I am here.
Robert Elmer,
Here for Commissioner Sagos.
Jonathan Golden,
Here.
Adam Reed,
Here.
Mark Shaw.
Yes.
We have a quorum.
Thank you very much. In Max's absence, it is necessary for the committee to permit me to chair. I'll ask you for a motion.
So moved.
All right.
Seconded.
I think I'm approved.
Yeah.
I think that was anybody but us.
Yes.
But you're right, nobody else actually approves of me at all. The second agenda item is the approval of the minutes. We have a resolution for that approval. Have you all had a chance to read those minutes?
Yes.
Okay. They were circulated. Are there any comments or changes? Hearing none, assuming there is no opposition to the approval of the minutes are approved. Okay. The third agenda item, the acceptance of the annual agency financial integrity compliance statements. I could not say that again quickly. Of the New York City Municipal Water Finance Authority and the New York City Water Board. We are required as an audit committee to review the annual financial integrity statements. They are completed, as you all know, separately for both the Water Board and the Water Authority. Both statements have been circulated to the committee for review. And Bob is going to walk us through them with help from whomever he chooses.
Sure. So this is, I guess, our annual exercise of complying with the Controller's Directive 22, which governs that all component units have to issue this Directive 1 or the checklist, the financial integrity statement. I think I emphasize each year that while this is an excellent document that was developed many, many years ago, its applicability to the Water Board and the Water Authority, it's just not very applicable since we don't use the city's either procurement system or its financial management system. But later on, we're going to discuss the authority and the board's internal controls, because we do have a separate governing document of our internal controls that we review each year. And that's in the package, and we update it each year, and that's in for review. We'll talk about that a little bit later. But if there's any particular questions on our submission, we're here to answer anybody's questions.
Are there questions from committee members? I have none, Bob. I think I did in years past, but I don't this year. All right. There is no resolution here to approve. We simply had to confirm that we've all reviewed it. Is that correct? Okay. So we can move on to the next agenda item, which is our self-evaluation and review of the annual report of the Audit Committee. And this one does have a resolution. I'll ask for a motion to entertain the proposed resolution first.
So moved.
Thank you very much. Is there a second? Terrific. Now, the Audit Committee charter requires that the committee perform a self-evaluation of its functions annually. That report has been previously circulated and is included in the package that you all have in front of you today. There's no need for me to read this report, I hope. Are there any comments or suggested changes to the report? Hearing none, may I have a motion, please, to approve the resolution?
So moved.
Thank you. Is there a second? Thank you very much. All in favor, please indicate with aye.
Aye.
The resolution is approved. The fifth agenda item is the review of internal controls, the policies concerning internal controls. Under section 2H of the Joint Audit Committee Charter, the committee is charged with reviewing the respective internal controls policies of the authority and the Water Board annually. The most recently approved versions of the internal controls policies have been circulated. There were no changes proposed to the Water Authority's internal control policy. Again, this is a review. There's no resolution. But Bob, would you like to talk about this a bit?
Sure. So we have both the Water Board and the Water Finance Authority's internal controls, and that's our administrative and our processes that we have within each company. It does not include the processes of DP, which really manages the computer, the customers, and the fixed assets. There are no changes here to the Water Board. There's minimum changes to the Water Finance Authority. We get a chance to, go through this every year. There was some edits that were done, titles that was corrected, and there was just an immaterial, significant business process change with the way our payroll is processed. We used to have a payroll account that OPA actually debited the transfers to our payroll every couple of weeks. They created a concentration account where all of their they have one account, and all their sub-accounts of each one of their members gets, now the payroll gets transfers directly. So it eliminates one account and eliminates one of our reconciliations. It's a simpler process. That was the only substantial difference we had on our general controls.
Other questions for Bob? Is there a resolution here? No. This was simply a report. It would appear that that was the last agenda item. Is that
No,
correct?
No.
we have one more.
Yeah.
Oh, I see. I'm sorry. I'm one ahead of myself. Forgive me. You're going to present the audit plan, Bob?
Well, we're welcoming back for our second year, Mark Tarnett. Warren Rupel is the engagement partner, and behind me is Dan McAvee, for the camera also. He's the manager of our audit. We had a successful audit year last year, and Warren has required communications that he must, address to the committee members, and you get to get away.
Okay, thanks, Bob.
Before you go on, do we get, has it been clarified that after this presentation, we may not have an executive session because of the public meeting rules? Just for my information.
Yes, that's not part of this.
Okay, all right.
Okay, thank you. Bob, the purpose of this meeting, to meet with us as the auditors and the Joint Audit Committee, is prior to the start of the audit, for us to establish a connection. As we go along, I have some inquiries regarding fraud that I need to make of the committee members. I'll ask you for any input into the audit process. I'll briefly describe the audit process and the timing, and answer any questions that you might have. So there are hard copies of the materials that I want to go through that were distributed. So I'm going to refer to those. They're organized by tab. First tab is just some contact information for myself and Dan and some others on the team, in case you ever need to get in touch with us. The required communications are really contained in the second tab. So I'm going to skip to that. And then we can turn to the third page in. Just number page 2. This talks about our responsibility as the independent auditors. We perform the audit in accordance with general accepted auditing standards as well as government auditing standards. We've recapped the timing of the audit here. You can see that the deliverables are fairly consistent from year to year. While September 30th is kind of a deadline for component units to report to the city, there's certain pension information that needs to be included in these financial statements, which isn't available until the first week in October or thereabouts. So once that information is incorporated, that'll be incorporated into the financial statements by Bob and his team. We'll meet back with this committee in October and then issue the financial statements shortly thereafter. And these financial statements were also presented to the city's audit committee, which last year was done in January. The accounting principles for this year, with one exception, will be consistent. There's one new GASB statement, GASB statement 75, just described on page 3, relates to OPEB benefits, so it's post-employment benefits other than pensions. And the city is early implementing this GASB statement 75, so the component units need to implement it at the same time. It's a for the combined organization, the total liability is $1.3 million. So it's really, well, that's a lot of money relative to the size. It's not not a significant liability. Really, this year it'll result in some changes to the way the actuary calculates the OPEB liabilities. Other governments have had the way the city implemented the previous OPEB standards. Most of the liabilities are already recorded on the books, so liability liability that is recorded will just be adjusted for some changes in actuarial calculations. So they'll be incorporated.
I'm sure it's fine, of course, but why would a municipality make the decision to implement early?
So, yes, so I think what, and so this is going back to when we implemented GASB. There are two statements that come out, one for the plan and one for the employee.
Sure.
And it just makes so much sense that if you have the information and the implementation for the plan
together.
to do it, and the one for the plan is due this year, and since you have everything, it's just seamless to actually get it done together.
That's extraordinarily
Well,
reasonable.
that was what we heard when so I would think that would be the same
Makes
reasoning.
all the sense in the world. Thank you. Thank you.
The city does tend to implement standards early on top of that, though.
It's good news.
So that, we'll be reviewing the inputs into those calculations, et cetera. As I said, it's not a very significant liability to these entities. Item 4, we always point out that financial statements are management's responsibility. Our responsibility is to perform an audit in accordance with the auditing standards. Bob and his team, last year was our first year doing the audit, and as expected, Bob and his team fully prepared the financial statements, and our activities were limited to doing the audit. One of the required communications is to...
I'm sorry, man, may I just interject for a second?
Sure.
Quick question, could you describe for us in general terms the scope of the field work, the sampling or checking that you do? Because I know you said obviously management's responsible for the statements, but I assume there's some, in connection with the audit work, there's some sampling.
Oh,
checking.
in terms, well, I'm gonna briefly describe our auditing approach in a couple of minutes.
I'm sorry.
But in terms of the financial statements themselves, I mean, every number that's in there, we tie into supporting documentation or recalc. So even though they're preparing the financial statements, we're literally checking every amount in the statement that's in there.
Thank you.
And then, actually, this discussion is significant audit areas, to give you an idea of some of the things that we do in the course of the audit as well. So, first one we have listed there is the allowance for uncollectible receivables. The prior year allowance was $411 million. Again, part of what we do is we look at cash, look at the aging of the receivable, we look at subsequent cash collections, we look to see if there's any particular items that stand out as being large, et cetera. There's a lien sale program that's utilized to collect some of these receivables. So, it's really looking at the aging and the subsequent collections is the bulk of the test work there. Item B, capitalization of the utility plant and service. That's really your fixed assets, your property, equipment. There's two parts of the estimate there. One is to the extent that there's any salvage value for assets that are recorded, that's technically an estimate. And then the assets of the system over a useful life, that useful life is an estimate. So those two estimates really impact the depreciation expense that's reported. So it's technically, those are technically estimates. And we also take a look at the money or the dollars that are moved from construction in progress into plant and service, because that while something is in construction in progress, it's not being depreciated. Once it's transferred over to fixed assets, it begins to be depreciated. So we make sure that there's a reasonable process for doing those transfers. Continuing on, there's also a liability that's recorded as of the end of last year for pollution remediation occurrences. There's a specific GASB statement that covers that, GASB statement 49, and to the extent that there are certain events that occur that trigger an obligation on the part of the organization to remediate certain pollution or contamination, there's an estimate of what that costs, and that's recorded as a liability in the financial statements. So again, we'll be looking at the process that's used to evaluate that, and also kind of keeping an eye out to make sure that there aren't other instances that we become aware of that aren't included those liabilities, so to make sure that the liability is complete.
And could you talk to a little bit about what type of activities would be captured under that would be deemed as the liabilities?
A lot of it's asbestos abatement.
Could be fuel leaks.
Those are the typical items.
But this doesn't capture any of our responsibility, or the water board or others' responsibility under the Clean Water Act for kind of CSO issues and nitrogen into the waterways?
No, this would actually just, right, this would not, because I don't think the waterways, this is how properties are required.
Right. Just continuing on, you have a interest rate swap, which has a negative fair value of 143 million, coming up with the, as of the end of last year, coming up with the value of that. Those swaps is technically an estimate, so we'll look at the inputs into the calculation and then the calculation that's actually done by an outside party of what the fair value is to arrive at, to basically confirm that it's a reasonable value. The following two items are pension and OPEB expenses. So part of the liability that's for, you have very few number of employees that are actually here, but there is a you're in a cost share. You're basically in a cost sharing multi-employer plan. So under recently implemented GASB rules, this entity has to pick up its share of the unfunded liability of that plan. So that had been implemented a couple of years ago, and we'll be getting those calculations from the actuary. And the plan's auditor, which happens to be Mark's Pennant, also provides a report on the allocation of those amounts to the individual employers. So we'll be getting that report from our folks who work on the pension audits. And then there's really a similar process this year for the OPEB liability, because the new GASB statement on the OPEB liability really use the same basic underlying principles that the pension statements use. So those two types of liabilities will be much more in sync with each other in terms of the conceptual basis for them. So the process will be pretty similar. So those are significant estimates. At the end of the audit, item 6 will inform you of any adjusting entries that were recorded to the financial statements and any adjustments that were not recorded because they were deemed to be immaterial. We'll let you know about any particular accounting items that were discussed with management that are significant, or any disagreements or difficulties in performing the audit. Last year was our first year doing the audit, and we found it, we thought it went relatively smoothly. The second year you do something, it gets smoother. But we certainly had nothing that rose to the level of a disagreement. So I mentioned at the outset that had some inquiries regarding fraud, and those are in item number 9, which is page 6 and 7. Some of the items listed here we'll obtain answers to during the audit, conflict of interest, sign-offs, etc. But for the audit committee members, I'd like to specifically ask you whether you have any knowledge or suspicion of fraud at the system, or whether you're aware of any activities under the whistleblower provisions that are in place.
None here.
Okay, it's a good start. We'll also, item 10, last year we we had no material weaknesses or significant deficiencies. We did have some technology suggestions that we made. We'll be following up on those. During this year's audit, if we detect any internal control problems that do rise to the level of a significant deficiency or material weakness, we'll report them to you as such. And item 11, getting into the audit approach a little bit here, kind of briefly describes what we do. The various significant accounts are listed to the right of the diagram here. And it basically, this diagram is a little hard to figure out, but basically the center of it focuses on risk assessment. And that's really what drives our audit process, is to try to find the areas that we think have the most risk, some of which are in those significant estimates that I mentioned before. So during the, when we come in, we'll update our understanding of the internal control processes. We'll be doing walkthroughs and testing of some of those internal controls to continue make sure that our understanding is accurate. We'll update permanent file information for new bond issuances or any new agreements that occurred during the year. And then we'll focus a lot of our audit attention on the balance sheet accounts. Those are listed to the right of that diagram, as I said. Cash, investments, investment compliance. Really, those are more confirmation efforts with outside third parties. Utility plant and service, I went through some of the things we do on construction in progress and long-term liabilities. We'll also confirm all your bond issuances. We'll do recalculations of interest expense, et cetera. We'll tie in those pension and OPEB liabilities that are recorded to the information that's received from the actuary. And then we'll do a test of the operating revenues of the actual water sewer charges and bills. We look at subsequent cash collections of receivables, as I already mentioned. And we have our technology folks specifically take a look at the CIS system to make sure that they're comfortable enough with the controls that are in place there so that we can rely on that system to some extent in terms of performing our audit procedures. And then on the expense side, a lot of those expenses are really flowing through DEP, so we select samples of expenditures and get a backup and tie that into the backup. Bond issuance, I mentioned, we do recalculations and test that for reasonableness. And then the other part of it is some of the governance activities. We look for the conflict of interest, sign-offs, related party transactions, and then we're required to do certain testing of journal entries during the year. So to make sure that we're aware of any items that are being entered into the general ledger by means of journal entry rather than some other type of system integration. So that's a summary of the audit process. I hope that's sufficient, or
Yes.
Okay. Does any of the other committee members have any questions, or do you have any areas of concern or areas that you'd like us to take a closer look at during the audit this year?
If you go back to A, under significant management judgments and accounting estimates, I think we do a great job of that. I don't know that you agree, I'm not asking now, but it would be great to know that you do agree. Are the procedures we have in place for writing down and ultimately dispensing with uncollectibles, are we doing it well? As I say, I think we are, but I'd like to know what the auditors think.
Yeah, we'll report that. Historically, we've only been the auditors for a second year. I've been familiar with this entity for a long time.
A long time, you said, yeah.
And I know that process has undergone a continuous
Significant
kind of
changes.
improvement
Sure.
and change, and had been commented years back in terms of management letter comments, et cetera. But that's been, a lot of those issues have been rectified, and we feel comfortable with that.
Well, as I say, I don't think there's anything wrong there at all. I just want to make sure that you think the same way.
Yeah, no, if we don't, we'll report that.
Okay,
we'll report
terrific.
that back to you. Okay, anything else?
Any other questions for Warren?
I just have a couple more things to go through.
Okay.
Services to be rendered, there's a draft of our engagement letter, which we'll take a look at. We can confirm that we're independent with respect to the entities. And then we're also somewhat required to include a discussion of new accounting pronouncements, which we've listed here. I mentioned not all of these are going to apply. Some of these haven't been examined yet, but Bob wanted to speak specifically to item B, GASB 83, certain asset retirement obligations. There has been some work that's been done on that.
You would explain
The concept? Okay.
Then I'll take it from there.
Yeah, the concept basically says if there's an asset that you have that you know you're going to have some legal or contractual requirements or incur expenses to retire it, then you need to recognize a liability for those retirement obligations now. And this is very similar to a standard that's been effective in the private sector for a
A
while.
long time.
So you'd estimate what those costs are and record a liability for those. The offset to that liability is, in the government world, is a deferred outflow of resources. In the private sector, it's included as part of the cost of the asset. But you'd have a deferred outflow of resources that then over the life of the asset would be amortized into expense, so that the expense for those costs that are going to be incurred for retirement are recognized over the life of the asset, similar to depreciation expense. So that's the underlying concept of the.
Right, so, and the highlights of that, and that's great, is that, you know, the easy part of understanding this is that if you have a legal and a contractual type of obligation to do something, and I think it makes sense, right? If you know that at the end of a period that you have to do something, and it's gonna cost you something, well, we know that now, and we should book that, right? The mechanics of this, where we have this deferred outflow and this deferred endless liability, is just basically saying that you really have no, in your bottom line, you really don't have a very big effect, except for the amortization of the asset that you're deducting, you know, the cost of that. What that cost is, I think it's the life of the asset, or the shorter of if it's a lease term or something like that. So we volunteered when the standard first came out to exposure, to be part of the field test. And we learned something, us and the standard setters, that, you know, when you have, you know, cities, right, we don't really decommission too many things, right, because we just don't have the room to do it. So this is great when you decommission a water sewage trend in the Midwest, because and I'm gonna get in trouble for picking on the Midwest, because they have space, right, so you could decommission and rebuild somewhere else. We just fix and we build on top of each other. So we reached out to DEP and Joe Murin, which was very helpful, who contacted his attorneys that reviewed contracts and reviewed the law to see if we had any legal obligation to do something in the future. We didn't find any. We did find this one lease that we had, that on a piece of property, that we need to turn that property back over, where we had gas tanks, that we have to remove that gas tanks, and if there's any remediation costs, to pay for that. That ranged from a low range from $1 million to $3 million of our cost. So what we did was we submitted a full report back to the GASB with our pro forma financial statements and how our financial statements will look by doing that, and it had a bottom line change of $275,000, which is extremely immaterial for us. So I just wanted to share that, just let you know that we're on top of this, even though it's, I think, effective in,
The end of next year.
2019.
19, yeah.
The other one that might sound like it would be of interest to you would be 86 on certain debt extinguishment issues. Really, well, that's as, governments, if you're defeasing debt, you're issuing new bonds to pay off old bonds, to put money into a irrevocable trust to defease those old bonds. They come off the balance sheet. It wasn't clear if you didn't issue actual bonds to do that defeasance, if you just had other money that you wanted to defease the bonds with, whether you could do that, and this GASB statement basically says that you can.
Right, and just want to let you know that we've been doing that all along, so we've been following it, even though, we had the GASB that talked about the refunding bond proceeds and how do you handle that. There is an old FASB under the GASB 62 that actually alluded that we would, the accounting treatment for it, and we've been handling it like that all the way. So this just really memorializes what we've been doing.
It's always nice when that happens.
Yeah.
And the scope of the defeasance last year was around 800 million, or was it?
Yes, around that, and I don't have the number in front of me, but it was near that amount, yes. So we handled the accounting for that. We handled exactly because it was our resources. What the accounting is different here, that there is a deferred gain and loss where you immediately charge it off onto your books instead of deferring it out to the new refunded bond. But we've handled the accounting that way.
And we contemplate a similar level of defeasance this year, and as part of.
I believe so, and we have a soon to be
Yes,
appointed.
it's actually slightly larger this year, but it's similar level of magnitude, 900 million.
Thank you.
Thank you very much.
And then the last thing I had was just in tab 3 is a draft of our engagement letter. Our relationship with the entities is really governed by a contract, but what the ordinance standards require us to have an engagement letter that has certain required provisions, and the fee that's included in here is in accordance with our contract and proposal.
Are there any substantial changes in this engagement letter from what we saw last year?
There have been, in a section, which is on page 8, item number 3, there have been some revisions to the other language. And we've been able, had this similar language with other financing entities that we do for the city, so we've been able to come to basically come to agreement on the terms that should be included here, other entities.
And those terms really mirror our contract with
So,
Sorry
unless
for
there's
the-
any questions, it's.
Does the, quick question, does the audit include a review of management's decisions with respect to how to go about debt defeasance?
No, it doesn't. That's,
Management discretion.
And you guys are not going to charge us any more money simply because in this meeting we talked about, I'm sorry, I can't find it now, the allowance, spending more time on the allowance for uncollectible receivables. Okay, great, that's great, thank you. Any other questions? Now I can ask in a timely fashion, is there any other business to come before this committee? Hearing none, may I have a motion, please, to adjourn?
So moved.
Second.
Thank you. We are adjourned.